Hey guys, happy Sunday. So we got a short week here. Market is closed Thursday for Thanksgiving, so I'm looking forward to eating myself into a food coma. And then Friday, Black Friday, I think the market closes at like 1 p.m. Eastern, so we kind of got a half day. I can promise you one thing, I'm going to keep my ass at home. I won't be out there Black Friday shopping. But we got a short week here, so it could be choppy, it could be low volume, low volatility. Let's just get prepared like any other week. But we're going to start with the potentially ugly here, and not really ugly so much. Just in taking a look at last week's price action, there was certainly some distribution taking place. If you look at the S&P 500, it was dead flat because of the strength in Apple and Amazon. So financials were down last week. Under the 50 red histogram, they lost their stacked DMAs. Energy closed. I mean, you're down like 4% on Friday. Under the 50 negative histogram, no stacked DMAs. The small caps, kind of steady distribution there last week. And the Dow Jones, the Dowster here, not bearish, right? But there's just some distribution taking place. XLC, the communications sector, still that thing still looks a little bit sketchy. So you can't see that if you look at your S&P 500 though. Because Apple, because Amazon, heavily weighted stocks, they're just going buck wild there. So pretty much what this means is the breadth of the market is kind of narrowing down to 3 or 4 stocks here. This doesn't mean the market rolls over. It's just more so, hey, let's have a good grasp of where the capital is flushing to right now. And of course, if in the event the capital starts to pull out of Apple, Amazon, Google, Tesla, if that cash doesn't rotate into energy, financials, etc., then you see the market come in a little bit, or a decent amount. But with all that being said, breadth narrowing, whatever the case may be here, because of the trend and the structure and the squeezes, I'm going to keep focusing on the same stocks here. Apple, Amazon, Netflix, and Tesla. Here's the thing. Can't really suggest that, this isn't the best spot to it's not the best spot to get long Amazon. If you're not comfortable sitting through a flush all the way back down to like 3,400. Now, realistically, I don't think that happens. But that's what you got to, that's a potential up here at 2 to 3 ATR. So if you get buying Amazon over here and you're not comfortable sitting through that dip, and mind you, the dip doesn't change anything, right? It's still a good daily squeeze. It's still structured. The point being, if you're going to buy extended, don't do that if you're not comfortable sitting through the pullback. So, you could wait for the dip here. I'm not too sure you get the flush back down to the 8 or the 21, but that's got to be your mindset. Even if you think in the next 4, 5, 6 weeks, Amazon's going to 3,900, 4,000, which I do. You can't get long up here if you're not going to comfortably sit through the dip. Think of it this way. You think over the next month or so, Amazon's going towards 4,000, but you take a crappy entry up here, you get shaken out on the buyable dip. You're losing money, and more likely than not, a month down the road, Amazon did exactly what you thought it would do. So you can structure trades up here, smaller position size, scale into your position, give it plenty of time to expiration. You can structure some things so that if you do have to sit through the flush, it's not going to be all that ugly, but that's the thing. Be prepared to do so. So that kind of reinforces, find the squeezes, but build your position inside the squeeze as close to that 21 EMA as you can. But with Amazon here, we're locked and loaded in the options room and my mastery. So weekly squeeze fires long, 3,900 to 4,000, definitely possible. So any dip, any 1 hour, 2 hour, 4 hour squeeze you get here in Amazon, this is point A. I think we're going to point B. You're just looking to build your position, pick your spots wisely. So I think Amazon is poised for more here. And I'm pretty sure I showed y'all this on Friday. Can't quite remember. But we're rocking with January 21st expiration. So we're giving this sucker all the time in the world. I think we're already at like 50-ish plus % of max profit. So in the options room, we got 3,400, 3,370 put credit spreads. I got 610, 12 contracts on that. And then in my mastery, we got 3,350, $33.40. I got 10 contracts there. So at this point, these are Delta 20. Premiums coming in nicely. And I want to add more exposure here in Amazon. I don't have to rush into that, though, because I did my job, and I built my position closer to the 21 EMA. So of all the things that we cover, on the channel here, that's just such an important concept I hope you apply to your own trading. Find an uptrend, find a squeeze. If there's 2 squeezes, if there's 3 squeezes, even better. But build your position at the 21 EMA. You might have to sit through a chop fest, but guess what? Once a move unfolds, you was already getting paid. And then you can much more comfortably sit through a dip. But Amazon, daily, 3-day, weekly, monthly squeeze, I think it's gearing up here. Everything I just said about Amazon, apply that to Apple. So we don't got to go through it all again, but same exact thought process. I think we're at point A. I think over the next month or so, point B is going to be 165, 170. Got to pick your spots wisely. And in my book, there's no wiser spot than inside, that triple squeeze. Right at the daily 21 EMA. You get long up here, just don't get shaken out on the flush back to the 8 EMA or even to a dip back to the 21. Kind of a pain in the butt, but in terms of structure, it doesn't really change much. But the big to-do here is that weekly squeeze, which just looks pretty primo right now. So we have orders working on the positions that we have in Apple. My mastery, we got January 21st. Get some open profit there. Decent premiums coming in. And we got orders working to buy those spreads back at 85-90% of max profit. But that's a game plan. We're at point A. I think point B is 170-ish. How can we intelligently add to this position? So it could be the dip to the 21 EMA. It could be the next 4-hour squeeze. But the easy trade's back here. So we got the easy trade on that next flush. If we happen to get a good dip here in the market, Apple should be top of your watch list. But here's the good news. Netflix isn't extended. So it's just as good of an uptrend. Stacked EMAs, green 10x bars, but you're not chasing this one. And you got a daily squeeze. So I think ultimately, a move towards 720 makes sense. So long as the market doesn't roll over. But you're not chasing this one. So, in the event you come back towards that 21 EMA, what I'm looking to do, in terms of adding to this position, we've already got some exposure here. Let's see. December 17th expiration. So there's a position we have in the mastery. And in the options room, we're sitting on the 650, 645 put credit spread. If you get a little dip here, if I could pick this up for $1.50, maybe even a little bit more, but even for $1.50, it's close enough to a 2-to-1 risk-reward ratio. So I do want to add some more exposure here. Great looking uptrend. Not extended like Apple and Amazon. So I think Netflix is a good pick here. And then the one, the only, Tesla. This is kind of, textbook trend, textbook ebbs and flows of the market. If you read Mastering the Trade, this is, Chapter 1, Chapter 2. Squeeze at the 21, big release of energy, reversion to the mean. You're looking for the next push higher here. Big flush, but the big flush, in my opinion, just based on the things that I focus on, the big flush here didn't change a damn thing. You held support at the 21. You never lost stacked EMAs. You still have green 10x bars. It's just a pullback to the buy zone. I'll take it. So we're adding a little bit here Friday afternoon in my mastery. We got December 17th expiration. What do we get? 1050? 1020, 1010 put credit spread. But I think Tesla's gearing up for a push back towards a brand new all-time high. The initial target here, they basically just pick sexy round numbers with Tesla. And it's a matter of, process of elimination. 1200, 1250, 1300. This one not crazy extended. So depending where we open up tomorrow, I don't think you're chasing it too much up here. Again, just don't get shaken out on a flush. I'm giving Tesla all the way down to the 50-period simple moving average. The trade that we structured here is designed specifically to give us a good risk reward, so a good bang for our buck if we do get a push to the all-time high, but at the same time, not going to get my ass handed to me if we flush back down to the 50. All said and done here, it's kind of like a 1-to-1 risk-reward ratio. But Tesla does look pretty solid. And Tesla's one where you really look for that good entry. And if it's not the daily 21 EMA, a lot of times it's going to be on your 30-minute, 1-hour chart inside of a squeeze. So if you go look at Tesla's most recent push, I don't got enough chart history here, but you can take my word for it. The hourly squeezes, the 30-minute squeezes, great opportunities to catch a continuation of that push. So there's two plates of opportunity here. There's that core kind of swing position that you try to build as close to that 21 EMA as possible, but take that simple point A to point B mindset. And mind you, the thing could roll over and puke, so there's always that. But in terms of the path of least resistance in this trend, continues to be to the upside until further notice. But if you're looking to play that move from point A to point B, granted, my trade is, alright, I'm going to sell a put credit spread back here, try to catch the push, but there's ways to add exposure and there's ways to catch additional trades. So you get your next 30-minute squeeze on Tesla, that could be your spot to pick your position, trying to catch that continuation as we go towards, at least I think, 1250 to 1300. So Tesla time, looking pretty good here. So something I would add to if we were to open up a little bit to the downside tomorrow, or if at any point over the next week or so we come in a little bit. I think a beautiful trend, I think a good structure. I think since that weekly consolidation broke back here, you're looking at a stock trending again. It's back in motion. That, realistically, my friends, is what I got for you here as far as my focus list. We can take a look at a few different setups here. But with the breath now where my thinking continues to be until something changes, there's a lot to be said for the big FANG stocks here. But we'll go through a few that look pretty good to me. So in terms of a sector, big push here out of the transports, reversion to the mean, brand new daily squeeze. So potentially, not immediately, maybe, but ultimately the trend is going to continue. Should happen out of the daily squeeze. So inside of the transports, UPS here, good push into earnings. Sorry guys, I got a cold. Good push into earnings. Reversion to the mean. Brand new daily squeeze. So it's kind of a mirror image to the IYT there. So same thought process. Daily squeeze continues to daily squeeze. If the trend is going to continue, here's a structure to look for the next push higher out of. So that's pretty good stuff there. Now UMP, along with UPS, they're the two most heavily weighted stocks in the transports. So again, good push, reversion to the mean, daily squeeze, all kind of the same here. So IYT, UPS, UMP, pretty solid stuff. NOW continues to come up on the scan here. Good trend. Pretty good trend. Nice daily squeeze. You do have stacked EMAs. You get some green to next bars on bigger time frames. My only gripe here, and it's not so much to say this rolls over. To me, it at least more so says you can wait a little bit before getting long here. Daily histogram momentum shifting to the downside. And if you go down to this time frame, 4-hour, 2-hour, 60-minute, 30-minute, it's just not crazy bullish under the surface. So if I'm trying to build a position in that daily squeeze, ideally, there's stacked EMAs and green 10x bars everywhere. From that point of view, this leaves a little bit to be desired. The 50 should hold the support. If it doesn't, daily squeeze probably fires short. But it's a great uptrend, so I would look for the 50 SMA to hold the support. But then I'm looking for more bullish momentum. I want green 10x bars and stacked EMAs in a positive histogram, pretty much on a daily chart down to like a 30-minute, 15-minute. A lot of times you get that kind of just bullish structure from top to bottom. Those are the bad boys that really take off for you. So I probably don't do anything with that for now. Not probably, but I won't do anything with that for now. But a few of you did ask for this as a request, and it did come up in the scans. NUE looks really good. You got your all-time high up here around 130, so there's kind of your big target. This is textbook stuff. Daily squeeze with stacked EMAs and green 10x bars. So I'm not saying I'm going to trade this exactly, because I got some good exposure in my account right now, but I make a living trading pretty much this exact setup. You do it here, it's good looking stuff here. So momentum, structure, everything is intact, and you got a 4-hour squeeze. So I like this here. If I were to take a swing trade on this, as I tend to do with most swing trades, I'm going to look for move into 2 to 3 ATR. You know what? That gets you pretty close towards those highs here. So I do think you can structure a trade with a bit more time till expiration. Looking for a push into all-time highs. Let's check out, ooh, that's right. I forget. All right. Yeah, I would look for a move into all-time highs. Beautiful weekly chart. I forgot you had a squeeze there. And you have a 3-day. Yeah. All-time highs are bust. Would be my mindset on this. Quadruple squeeze. You got squeezes everywhere. Good looking stuff there. So that came up in the scan results. Next up is HubSpot. Good trend. Daily squeeze. Stacked EMAs. Green 10x bars. Y'all are picking up what I am putting down. My go-to setup over and over again. And then Coinbase here. Which is pretty interesting. Let's check out the weekly chart. That's right. It's kind of a recent IPO. Let's mark up our all-time high up here. Let's take a peek. 3-day chart. So the daily is kind of the only thing you can sink your teeth into here. Right? It's go-to stuff here. This is go-to stuff. Daily squeeze, big push, reversion to the mean, brand new daily squeeze, stacked EMAs, green 10x bars. Great looking stuff here. Let's see, how would I go about trading coin? Let's take a look under the hood. Let us pop the hood. December 26 expiration. Kind of thinking January. I don't know why. More and more, I'm just a bigger fan of giving my swing trades more time. Even with a credit spread, if you catch the move you're looking for, what am I looking for here? 3 ATR at 380 would be the first target, but if you give it time, you get the opportunity to catch that move back into 400, 425, 430. So let's see, the 50 period simple moving average is down here at 285, 290. So if this is the beginning of a trend, right, out of that big push, you shouldn't end up back under your daily 50. They don't let bullish stocks get under their 50, more often than not. Put it this way, if it does, at least in the short term, the trend is a little bit disturbed. It's a little bit disrupted. So that should hold the support if this thing is going to be legit. Are you going to be legit here, coin? Let's take a gander here. 290, 285? Let's see. It's not, so here's my thinking. Put it this way, right? It's not quite a 2-to-1 risk-reward ratio. Whatever. Say with a high probability trade like this, right, where you're going to sell short puts in a spread down at 290. In other words, if this recent pretty good looking daily trend. As long as this doesn't completely break structure, you're going to walk away with a paycheck. So not quite 2-to-1 risk-reward ratio, but if you can lock in these credit spreads with about a 2-to-1 risk-reward ratio, you risk 4% of your account, you make about 50 trades a year, potentially doubles your account. Now, of course, along the way you got losses, but at the same time, of course, along the way, your account's growing, so your risk per position, all things being relative, grows. What I'm trying to say is these high probability swings with the credit spreads, they add up over time, so you're not going to risk $1,000 and make $5-6 grand on that trade. You could have some serious consistency, so I would like something like that. Short puts at 295, 290. Let's check out how's 295. $1.60. Yeah, there's your 2-to-1. I kind of like these trades. Throw 5% of my account at it, set an alert under the 50. If it doesn't break under the 50, then I don't got any issues here. And I don't really got to pay too much attention to it. I'll set my limit order to buy the spread back for, 85% of max profit. You get a handful of those a month. It's good steady growth there. So that's probably something I'll take into consideration here with the coin flip. See where we open up tomorrow. That, my friends, is all I've got on my list, though, as far as what came up in the scan results. Yeah, Apple, Amazon, Tesla, Netflix, for me, going to continue to be the major focus. Especially as it kind of seems that's what their, as my colleague Sam said, big money is favoring big tech stocks right now. So we got to follow the money at the end of the day. So it's not so much energy right now. It's not so much the financials. It's kind of glaringly obvious. It's tech stocks and then semiconductors. So I'm going to keep focusing on the big fangs here. Keep focusing on Tesla. But let's jump into your chart requests here. Got a good amount this week. A few of which we did cover already. So we did cover NUE. So stay calm. You got a good eye there. We can take a look at CMG, Lucid, Sava, AMD, ADM, Sandy we covered, NOW. Damien will take a look at Crowd, God. Hello, God. We covered Coin. Take a look at UNH, Roku, MU, AMD, PayPal. Alright, let's bang through these. And I always got to preface this by saying, which y'all should kind of get the sense of by now, I kind of like the trade one setup. So if I don't like your setup, I'm just one guy trading one setup. Sitting here in Snoopy pajamas. Alright, so we covered NUE, Tread, Chipotle. Can it recover? Here's your key level, my friend. Because this daily chart, it's just kind of sloppy. Your key level here, in my opinion, is going to be your weekly 21 EMA. So we'll take it to the weekly chart. You close under your weekly 21. Kind of opens the door for a move at the very least, down to -1 ATR on your weekly chart, which is about 1685, 1690. So in terms of a strong uptrend, that 21 EMA should hold the support, and it has up to this point. Held pretty nicely there, gave you a pretty good pop. But we're range bound right now. That's the other thing. We're not bearish by any stretch of the imagination on this weekly chart, but the histogram's declining. We've lost a little bit of momentum. So now we're more so kind of trading back and forth in this box here. Very normal inside of, really any time frame. You're in a consolidation on any time frame. Very normal to go from +1 ATR to -1 ATR. So I think if you can quickly get back above your 21, then you got a chance at just making a move at the very least back towards +1. But if you can't stay above your 21, then I'm thinking you might get a fade here down towards -1. So it's kind of like your over-under. If you're above the 21 EMA, very normal to go up to at least +1. Under the 21 EMA, very normal to go down to at least -1. Just average true range, remember that. So average true range in your weekly chart takes you it's a pretty good flush here on your daily chart. So I think for Chipotle, that's kind of the line in the sand here. Tried to short there, the short didn't work. If I gave it more time, it kind of looks like it might work here, but that's your over-under, the weekly 21 EMA. That's kind of how I would look at it there, Tread. Marco's got Lucid. Marco, I think Lucid's in a... Let's see. You know what, man? Shame on me for not paying attention last week. That's kind of the flush I've been waiting for. So kind of silly to give the same advice now after it unfolded. Wish I had seen that, though. Because I think you're into trend mode here. Weekly squeeze just fire to the upside. You're only 3 weeks in. You could easily get another 2, 3+ weeks of momentum. Doesn't mean you don't dip along the way. But I think breaking that long weekly consolidation, I mean, we're talking long consolidation. I think you're into trend mode here. So my game plan, when chart alerts are your best friend. If I just had a chart alert and even the 8 EMA here, I would have known it flushed. But when you're in trend mode, this is what I'm ideally waiting for. Your little dip to the 8, your little dip to the 8, your little dip to the 8. Those are pretty good opportunities. So I do think you continue to go higher here. I'd have to wait for a decent dip for me to build a position at this point. If you happen to already be long, though, I think Lucid looks pretty good. Just take that rule of thumb. Squeeze fires long. Good squeeze should give you about 5, 6, 7, 8 bars of momentum. So on that 3-day chart, you're only on the weekly chart rather, you're only 3 dots in. So I do think there could be more to come there, Marco, for Lucid. In terms of Sava here, not too familiar with this one. Let's take a look. Kind of just strikes me as sloppy. For my style of trading, I don't see any edge on Sava. I see a lot of edge in buying a dip on Lucid. You're in a trend, you've broken out of a key range, etc. And then, Marco, I would also say, I see a lot of edge trying to get long AMD on the next decent pullback here. Crazy strong, just a little bit too extended for me to want to take a swing position. Even if we dip to the 8 EMA, we're still at +2 ATR. So I do want to get long AMD and NVIDIA. I just kind of need that morning where we're down, 2-3%. Then I can come in here. So if you're looking to get long AMD, Marco, I think you're looking in the right spot. For my swing trades, it's just a bit too extended here. That's my day to take action. There's my 2-day window of opportunity. We're flushing, the calls are getting cheaper, the puts, they're gaining value, so now I can get a better risk reward on my put credit spreads. I'm looking for that here in AMD. I'm looking for that, my friend. So Marco, out of those 3 picks there, just from my style of trading, I would buy the next meaningful dip on both Lucid and AMD. Fernando, you got ADM here, which I took a peek at earlier when I saw you post that. And for those of you watching, every Friday on the channel here, I'll post the chart requests. But Fernando, whoops, lost my YouTube there. All right, Fernando, ADM, very solid. I like this a lot. So I took a look at this one earlier. Got your all-time high, right at 3 ATR. A good daily squeeze could take it to at least 3 ATR. Stacked EMAs, positive histogram. I like it for now. I would like it all the way down to the 50. It's all kind of convenient here as far as what I like to work with. -1 ATR lines up right at the 50. So that should be key support. And then 3 ATR, the typical target here. right at all-time highs. So I think it's a great structure there. I do like that a lot. Those are the kinds of things I like to trade. Sandy, we covered NOW. Damien is looking at crowd here. So Damien, ask me again after earnings, because I typically don't trade things if we're a week or so out from earnings. But let's pretend earnings is, nowhere in sight. You're in a squeeze, but you have no stacked EMAs. You have a negative histogram. So you're in a consolidation. You're in a compression. But these are our clues here that potentially that energy that's getting built up gets released to the downside. There is your key level of support, though, your weekly 21. So here's what you want to look at. You had that flush, then you had that flush, then you have this flush. But notice the structure of your weekly chart here. Positive histogram, stacked EMAs. So since your weekly chart has gotten a pretty good bullish structure going, weekly 21 EMA has been support. When you pull back to your weekly 21 has been support. Here's the thing though, on a bigger time frame like that, as it pulls back to its 21, what happens to the lower time frames? In this instance, a daily chart. In the short term, it starts to look pretty bearish. Then it just kind of rips face. Looks a little bit bearish, then it rips face. So, from a daily chart's perspective, looks like something you could easily short. From a weekly chart's perspective, this is key support. So that's kind of your pivotal level there. You can take that and run with it. Personally, it's just a little bit too close to earnings. Also remember, we got a short week this week, so we're kind of getting robbed of a day and a half of opportunity. GOD. Took a look there at coin already. Damien, UNH kind of looks like a short here. But then we got to look at a weekly chart. So short-term daily time frame might be a little bit bearish. But is this because we're pulling back to a bigger time frame's key support level? So we'll check out the weekly. This is a bullish weekly chart. You got a squeeze, you have a positive histogram, stacked EMAs. So in other words, we could look to short this. I would rather look to buy it if we actually do dip to the weekly 21. So two different mindsets there. One is much more short term, trying to catch a quick move, kind of counter big trend, right? And mind you, your weekly 21 is right below your 50, so you get some key support there. Or a bigger picture perspective is, hey, we're in a weekly uptrend. If we pull back to weekly support and we still have good structure and momentum, I'm going to buy that. There's not a right or wrong answer. For me, I'm trying to buy the pullbacks of the weekly 21. So I won't short them on the way down. I'll sit there, watch it pull back, and then wait for support, then wait to come in and pounce. King Kong, Roku. 490 to 200 and change pretty quick. So there's just some big time distribution here. In terms of the things I like to work with, it's in a downtrend. That's just my opinion. Now it's oversold as hell here, so it's setting up for a pretty good bounce. I would short bounces. You could try to get long, catch that oversold bounce. Me personally, I don't like counter trend trades. And as you break structure everywhere, this is potentially, definitely, you're in downtrend territory here. So in downtrend territory, I would only short bounces. That's my opinion. Believe me when I say there's money to be made getting long for that oversold bounce. The only thing there is I think you got to keep it nothing but that. So you get long here based on something. You get it bounced to your 21 EMA, I think you take profits because you probably get rejected there and keep selling off. So in terms of signs of bottoming, I'm not seeing any just yet. Negatively stacked EMAs, red 10x bars, negative histogram. No signs of bottoming just yet here. I also would absolutely not short it because we're so extended. Doesn't mean it doesn't keep rolling over from here. That's not where I'm going to get short. Just like, this isn't where I'm going to get long. See how that works. Ivanish, Micron. If any of you actually watch this entire video, because we're clocking in at 35 minutes, if you make it this far, leave me a comment down below. Just so I can tip my hat to you. Micron here. Not the cleanest of the semiconductors, but a heck of a move there last week, so maybe trying to get a little bit of mojo going. Just too extended for me here. I would buy it on the next pullback, if I was interested in buying it. A little bit too extended. Now keep in mind, extended does not mean you don't continue to go higher. Tesla was extended back here at 850. Bad boy goes to 1250. Marco, I think we discussed AMD. I want to get long the semiconductors, so Micron falls into this category. Just not my favorite spot. So I might miss the next, 5%, to the upside if I don't get a better entry. And I'm okay with that. Alright guys, last request here. Noor has got PayPal. Another one. Daily structure momentum, it's bombed out here. Right, so just totally out the window. Totally bearish. 3-day chart. Totally bearish. Here's the one that matters the most. The big W, the weekly. This is downtrend territories here, my friends. You're looking to short bounces back to the 8 EMA or the 21. You could look to get long for that oversold bounce, but once you break your 21 EMA, once you have a negative histogram, and once you don't have stacked EMAs, path of least resistance tends to be to the downside. And if that picture is getting painted on like 2, 3, 4 big important time frames, it's kind of getting ugly here. So you're shorting bounces or you're trying to get long for the oversold bounce. I prefer trades in the direction of the trend. But longer video here, y'all, so hopefully you find this helpful. We'll see what this week brings. It's going to be a short week, but that is what I got for you. My focus, quite frankly, doesn't change. Netflix, Tesla, Apple, Amazon. If I have the opportunity to add to those positions at a good spot, I will probably do so. And then coin is kind of the one thing I'm thinking of planting a seed in. As far as a put credit spread for January's expiration. But I am looking forward to tomorrow morning. So as always, I'll be live at 8:45 a.m. Eastern, 7:45 a.m. Central, and whatever time that might be elsewhere in the world for pre-market prep. So I hope to see all of you there. Otherwise, hope you found this weekend's lengthy Watch This video helpful, and I'll talk to you in the next one.